All right, good afternoon, everybody. Jumping on here real quick, going through kind of where we are with price action, and obviously heading into FOMC and presser at 2:30. So I've just outlined key levels for today. Obviously, the yellow was our drunken sailor range. Within that overall drunken sailor range, we're kind of at the mercy of the volume, or sorry, intraday volume analysis and volumetrics. So that's kind of where we're at now. So top of the drunken sailor range, we discussed 63.90. We came right up to it, almost to the penny, and touched it, and then came back down. Lower side here. We tested zero gex and the bottom of drunken sailor range multiple times here, or one test, and then held above. And then we crossed back above P trans, but we're just chopping within the overall drunken sailor range, and this is kind of why we talk about this range of being difficult to trade, just a low exposure area where again you can get shoved back and forth with price action depending on what the intraday volume analysis or intraday volume looks like from 0DT traders. So this can be a difficult area to trade. On the other hand, if you're looking to do some sort of option structure, obviously we know 63.90 and 6400 are key levels to the upside. Top of drunken sailor range keeps getting rejected. So if we were not seeing upside call speculation, out of the money speculation above 63.90 into this area, you could sell something above here. Obviously not anticipating price would go through here, but obviously you're coming into a binary event. So, with the overall conference coming up at 2:30, obviously we would not be putting in any options trades at the moment. You want to be out obviously by 2 o'clock. But these are areas to watch to the upside post FOMC, and then to the downside, we've already tested those areas, key levels, 63.70, P-Trans 63.75, and then our transition areas, we've just chopped back and forth. So I think we did pretty well identifying the drunken sailor range today, heading into FOMC. That most likely this was going to be just a chop area back and forth, and that would probably be difficult to trade. So even if you didn't trade, or our pre-market prep kept you from trading, I think that was probably a great idea, kind of what we discussed this morning. Our intraday volumetrics, so we'll look at those real quick. So this is a vol-m command, and just to get everybody oriented real quick, the green bolded line is the call centroid, the red is the put centroid, and then our dotted lines are what we call linear fit lines. So this is just the mass of where market participants are transacting overall options trades. And you can see when we have a kind of parallel, kind of what we call railroad track or interstate look, that is extreme range bound action. And obviously heading into FOMC, that's pretty much what we've seen, just extreme range bound action. So if you were looking at this mid-morning and you saw this type of action, then obviously you would not be trying to trade any directionality, and most likely you weren't trying to trade that anyway heading into FOMC. So now we'll see if we start transacting higher post FOMC, or do we start transacting lower? And then what we'll start to see is these centroids, the slopes of the centroids. We'll start to see them, either the call centroid will start turning positive or negative, and the put centroid again will turn positive or negative. You see the slopes right here. I have a slight negative slope on the call centroid, slight positive slope on the put centroid. So again, those are pretty much flat to railroad track style. And then our rate of change is here. So post press conference, we'll see if this rate of change starts to pick up, indicating increased options activity and directionality wise. And then we'll watch this slope again to see directionality wise, does the call centroid slope start changing into a positive direction, indicating market participants are transacting the mass of options transactions higher, and that'd be out of the money call speculation? Or do we see it turn negative, and then our put centroid would turn to a negative slope, indicating that we're targeting lower overall strikes, and that the centroid would start moving lower, and then that would obviously pull the call centroid most likely down too. So that's kind of what we're looking at heading into the 2:30 time frame here. But anyway, if you go back and review This morning, our pre-market prep, hopefully that helped everybody at least stay on the right side of the trade or out of trades. And then if anybody has any questions about that, I'd be happy to answer them. You can look at the overall market trend model for today. We did barely cross back above the shortest term moving averages here. So obviously that's a little bit of a positive development, but you're still within the overall possibility of a failure and move back to the downside. Again, just sideways type action. You see the breadth indicator here, really no distinctive outpacing. I mean, new highs are barely outpacing new lows. So again, breadth not indicating a significant bullish move to the upside. So we'll see how this plays out into the afternoon. Again, this upside 63.90 is a key level. Make sure you're marking that on your chart, as well as the downside of 63.70, and then just within the overall transition areas, as well as P-trans and zero gex. If we do not hear of anything major change within the overall press conference, then I would assume most likely we'll continue to chop around within this drunken sailor range, again, unless we see our vol command start to indicate that market participants are transacting higher or lower within the overall option structure. So we'll obviously, this will give us the first indication, and we'll share that obviously with the members, and we may give an afternoon update here past 3 o'clock on X. You can follow that. And then we'll see if we post an update and see if we see any change from this railroad track style of centroids, indicating obviously just consolidation for the rest of the day. So yeah, if anybody has any questions, go ahead and plop them in the chat. I'll be around for a couple more minutes. Thanks for joining us. Had a lot of new members join this morning from the pre-market prep as well as this past week. So make sure you come and join us in Discord. Again, all the tools available. Great trading community of the full gamut of new traders to traders that are midway through their trading journey, or market makers or money managers or former money managers managing personal accounts. So we have the full gamut of people ready to help. Again, extensive education that we've produced that talks about our philosophy, our thesis, and how to trade, the tools as well as the levels to get you up to speed. And really demystify a lot of the haziness and cloudiness around using Gamma and Vanna and Charm for intraday trading, as well as swing trading or even longer term trading. We want to pull the veil back on all of that and expose everybody to just the truth and what is happening within the overall SPX option structure and how we can capitalize on that and help traders become profitable. So anyway, if anybody's had any questions, let me know. I'll hang around for a few minutes. We'll just continue to watch this price action into 2:30, the press conference. And then obviously, again, as you've seen, we've tested the upside and downside of the Drunken Sailor range, and that's basically what that was built for. And it's proprietary here to Game Edge, just key levels that help our members understand where the overall market most likely price will react, and then if we move above these levels, then what does that mean, and what is occurring under the current within the overall SPX option structure. So TT. So here's how I look at it. I would look at our vol command after first few runs after the FOMC press conference, and I'd see where our linear fit lines are, and we see if we start getting convergence with those linear fit lines. A lot of times we'll have a convergence towards the end of the day. So what will happen is this put centroid slope will start converging to the upside. The call centroid may start converging to the downside, or vice versa, both to the upside and both to the downside, and that would give us an idea of where a possible pin for the day is. Right now, obviously, we're 60 point range, 50-60 point range on these overall linear fit lines, so that would be difficult to say where we would close. Sitting right in the middle would be obviously an optimal close. We could look at our web app and see where the lowest exposure area is, but within the overall Drunken Sailor range, that's a low exposure area for dealers also. So again, that would be an opportune time to have some sort of pin close within these overall areas. So yeah, we could look at that, but it'd be nice to look at the volume command after this. So yeah. Yeah, exactly. Agree with Taylor D there. There's press conference, still a lot of volatility, but post press conference that would give us an idea. We'll see the couple vol M runs after the press conference, and that will give us an idea of where a possible close would be. So, yeah, I'd love to see a convergence of these lines. Obviously, start coming up in this type of direction, and then that would give you 20, 30 point range into the close. So yeah, so SPY will react with SPX. They're two different instruments. Make sure everybody understands that. But they also do trade in tandem. But what we've seen and what we found out is SPY actually could be put dominated, where SPX could be call dominated, and vice versa. And we've seen where SPY and QQQ can actually be hedging instruments for the SPX. And a lot of times we'll see that happen. So I'm not saying they don't react in tandem, but the positioning and the structure in SPY can be significantly different from SPX, as if market makers and dealers are using either one as hedging instruments, or even larger market participants. So yeah, agree, Taylor. Yeah, let me emphasize that the distribution is very large at the moment for 60-point range, 50-point range. So what we like to do is we like to have these start to flatten out, linear fit lines, and we like to see the rate of change flatten out and get as close to zero as possible. And then if we continue on that trajectory towards the end of the day, that would give us an idea of where a possible closing could be. And we like to get that down, obviously, within 10 to 15 points. You don't want to be looking at a 40 or 50 point overall structure into the close. So single stocks around key levels. Let's look. Let me see if I updated my script here. Let me update my script real quick. So TradingView script for people that are listening is ran for our members. It's automated. You just copy and paste it. So I will get the updated script here real quick. Let me grab it for 9:48 here. So anybody has any other questions or thoughts or comments here? So our levels that we produce for all of our members here, it's just a quick copy and paste. And okay, I already have the 9:48 updated. So once you paste that in, if the update on chart doesn't come up, it means I've already updated this morning. So I couldn't remember. Let me make sure this one's updated. Broadcom ABGO is one that's been in our P2P portfolio and doing extremely well. So okay, so all these are updated here. So let's take a look. We'll run through the Mag 7 real quick. Amazon trading around P-Trans, obviously key level 230 there to stay above. That's important. Apple kind of hanging around COTMC, staying above P-Trans, just kind of sideways. Looks like a lot of these are sideways here. Meta under all the transition levels, so nothing really there. Google close to COI, up top 200. That may be an area of stalling. Nvidia not really doing much. Tesla ran above peak X and then back down below plus X. So this is an area where we historically see some profit taking, possible monetization from our mechanical portfolio. That's P-Trans to plus Gex. So that would be one to definitely keep an eye on. If we stay under that 320, that could be an area of monetization if we run up there. Let's look at a few other stocks. So ABGO really just kind of hovering around that 300 as COI, staying strong there. Robinhood, CoreWeave, Circle, Uber, Microsoft, not really around the level. So the one that's closest to a key level would be Amazon, right around 230. That's P-Trans. So if we do get any bid into the afternoon, any buying, that would be a good trade off of 230. As long as it stays above. COTMC or COTMP is 228, so that's where out of the money puts BO in the money. So that would be an area to watch for a key area. And then Apple staying above P-Trans, but that's the only ones. And then this Tesla is very interesting around 320. That's a profit taking area, and if we see any weakness in the overall market, again, not financial advice, but That may be an opportunity for if the market turns to the downside for a short versus 320. Again, you're in a positive gamma call dominated environment because you're above P-trans, but if you're a quick scalp trader, this is a historical monetization area, so you might see a little bit of pullback there. But the better trade would be if the market turns to the upside, it would be wait for a pullback, P-trans to come up under price, and that would be an area to get involved on Tesla. So Amazon's the only one that's looking really interesting if we see us move back to the upside. So yeah, 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 I agree with Taylor on the drunken sailor range. What I laid out, this gives you information. That's why that we've built this drunken sailor range. Not being able to move above this, I can pull up our net stack command real quick, and we can just look at the highest sensitivity areas that I went over this morning. I think we pounded 6,400 into the ground this morning. So here is our net stack command. So this gives you the highest sensitivity areas. We can go line by line here real quick and get everybody orientated here. Let me pull this back up here. So net stack command, this is highest sensitivity levels across the board with the Greeks, Delta, Charm, Gamma, and Vanna. So left-hand plane is below spot price currently, and then your right-hand plane, RHP strike, is above spot price. So you actually see in the money puts above spot price now. So that was a change. We were in the money calls dominated, or in the money calls when we started the day. So we do see a few in the money puts above. Again, this is within the margin of error, so this could bounce back and forth depending on where spot prices is. So you could capture some of those. But 6,400 obviously is an important area to the upside. And then we see a charm in the money, out of the money puts now at 6,370. Guess what? Bottom of the drunken sailor range across the board there on those highest sensitivity levels. And that's why we map these and lay these out in the morning, and then we watch these throughout the day. And these are automated for our members, so you can just quickly go in. Runs every 5 minutes. You can see if any of these are changing, but when these line up with our drunken sailor range and the key areas that we're looking at, it really just gives us a high confidence about the trading for the day. So then you see out of the money calls. So technically, Charm is out of the money put Charm is winning the battle at the moment. So that would be supportive. And then if we go over here, we guess what? 6,370 has been supported twice, right? So the out of the money put Charm continues to grow and continues to be supportive. So that's why most likely we were not able to push lower. And then we were not seeing the out of the money put speculation via our intraday volumetrics. So two key components there, not allowing the market to push lower as we went into the 11 o'clock hour. So again, this would be a nice trade off of these, historically off of zero GEX, crossing back above P-trans are areas to get involved. Again, we are within the overall drunken sailor range, so it's choppy. So this would be for a trader that wanted to quickly scalp back and forth. So that's how we look at the net stack command. Again, the gamma is your highest sensitivity level, highest at the money or in the money. So 6,390 out of the money calls. If we cross the 6,390, then we would most likely see what we call an expansion bar, dealer adjustment bar to the upside towards 6,400, and then that would be that next stalling area. That's kind of why I talked about not being able to cross above 6,390, kind of like an electric fence. But then if we get above 6,390, we might see a quick advance to the upside towards 6,400, and then that would be the next stalling area. So that's why we lay these out every day. We have our if-then plan, and we trade around these levels. We rarely trade within the overall range. We'd like to trade at the edges where we have higher confidence that either price will be supportive or price will be restricted, moving to the upside. So supply and demand, you could use support and resistance if you want, but I prefer to use supply and demand using our tools, understanding what the mechanics and structure are, and then why this is occurring. Why did price most likely be supportive at 6,370 for today? Why was it supportive? Well, two key components, right? It's a large gamma strike that was the highest sensitivity level that we were looking at on our net stack command. All right, 6,370 out of the money puts. Out of the money charm, out of the money puts, or winning the battle. This integral is larger than this integral, so this will be supportive as long as we stay above that strike for charm. Net delta in the money calls below us. These are supportive, even though they're down at 63.40, right? So two key components. And it was the bottom of the drunken sailor range that we identified for the day. That was most likely going to be an area that was probably difficult to violate unless we saw a significant amount of out of the money put speculation, which we were not seeing, right? You have a positive slope on the put centroid. That's not out of the money put speculation targeting to the downside. Out of the money put speculation targeting to the downside would be a negative slope. So this number would be negative, and you'd see this overall centroid in a downward fashion like that to the downside. But we were not seeing that. So that's why these two parallel lines or railroad tracks would keep you within these overall bounds. So I look at this as like a bowling alley, and these are your gutters, and these are pretty much where you're going to stay with those rubber blow-up bumpers, for kids. So you're probably just going to stay within this overall range, obviously until FOMC presser at 2:30, and then we'll see what happens. So if we get above 63.90, and now get above is just not one single candle crossing above. That would be a move above, and then maybe some consolidation or pullback, and then move back to the upside towards 6,400 because we have a decent amount of gamma up there. And then we'll be looking at our intraday volume metrics to see if there is out of the money call speculation to the upside. So we have another tool also. It's called VolD, and basically it shows us transaction over transaction, the strikes. Here's our other chart we like to look at. Let me pull up our interactive chart. So all of our charts are interactive too. You can zoom in, which is nice, and then you can scroll over and look at these. But you see this spike here. Obviously, this is call volume spiking to the upside. So what you want to see if you're anticipating a large move to the upside is you would want to see the call volume outpacing the put volume. So you want to see this continuing to spike to the upside, or this call volume, right? So this would bring that call centroid or the mass of market participants, that would bring that into a positive slope. So then you would see this slope obviously start changing to the upside. So see, our last one was negative 0.067 here. Sorry about that. Negative 0.027. And now we're negative 0.023. So, just barely pulling the nose of that call centroid up. So no urgency for call speculators to the upside at the moment. So you see that railroad track continuing, and most likely will continue until after the press conference. So anyway, all these tools are available to our members. 14-day free trial. Come in, take a look, kick the tires. We have an open mic on Sundays where all of the Game Edge team, the founders, and anybody working on the Game Edge team comes, and we answer questions, individual questions from the members, and we go in depth a little bit more and provide explanations live, so then you can interact. And then we're in the chat every day. All of us are traders on the Game Edge team, so we're not just telling you how to use our tools, we're actually using our tools in real time, showing you what we're doing and how we're trading using our tools. So we're not just throwing all this content out there and saying, hey, go use it and figure out how to do it. We're live in the Discord, in the chat, helping everybody. So yeah, so FastPass is our get up to speed really quick with our education. Let me pull that up, Taylor. I don't have give me 2 seconds. Anyway, if anybody has any other questions, let me know. So here is GameEdge.us. You can sign up for our newsletters. You'll be sent a newsletter every weekend with education, thesis, philosophy here at Game Edge. Here's our free courses. You can click on that and go here. Game Edge FastPass free course. You can sign up now. Put your email in. We'll send you all the content. You'll be able to go through it. It's all free. And here's our other options courses down here. School of Options free course. The Mental Side of Trading free course. Again, this is all free education. And then you can check out our blog, products, and our pricing, and then you over here to get started. So make sure you put in your email and sign up at least for one of these, even if you just sign up for the weekend newsletter, okay? Education Strategy Weekly or even the pre-market prep. We give a condensed version. Either one of these, just sign up, take a look at it. I think you'll get something educational out of it for free. I think something you'll find something that'll help you within your overall trading. But yeah, you can sign up for this, and then the Fast Pass is our flagship education course. Tons of man hours have went into it to get people up to speed. 7-module course there, just tells you really our philosophy, how to trade, our key levels using some of our tools, and then really kind of demystifying the whole SPX options structure for everybody. So make sure you join and check that out. So yeah, appreciate it. Thanks for the reminder, Taylor. Yep. So obviously it sounds like, or looks like he started the press conference here at 2:30. So we moved through 63.90 there. So, we would call this basically a dealer adjustment bar, but we're on some news-driven activity right now, right? But you can see as you drive through that 63.90, though, kind of that response where the highest sensitivity area is, right, that we've outlined within that overall net stack command that we just went over, right? So 6,400, 63.90, highest net gamma level, right? So that driving through that area, and then 6,400 to be the highest sensitivity area to the upside, where we actually have some in the money puts come in, and then those out of the money calls charm. If we're below that, we'll continue to grow and be an overall area that would most likely prohibit price action from the upside, again, unless we see a significant amount of out of the money call speculation via our vol metrics or our vol M command. So it's kind of what we're watching at the moment. So anyway, thanks so much everybody for joining us. I'll hang out here for a couple more minutes. We'll kind of watch the price action here. If anybody has any other questions, make sure you let me know. Again, gammaedge.us. That's our fast pass, all the free courses, and then you can click get started and then come join us in the Discord. We'd be happy to help you get up to speed. We also do one-on-one education calls that we do Zoom calls one-on-one. Once you become a member, if that's something you need, we're happy to go through it one-on-one with you too and help you. And education or trading coaching. I'm head of trader success at GammaEdge, but we're happy to do trader education as well as trader coaching to help you get up to speed also. So obviously we see now we drove through the 63.90, kind of another adjustment bar to the upside. So obviously significant change here, moving through those key sensitivity levels, and then 6,400 would be that next area to the upside. We would most likely watch for some stalling, again, unless we see a large amount of out of the money call speculation. So yeah. So let's check in on Amazon here. So 230, that key level, still staying above it. All right, looks like a pretty good drive to the upside so far. So those key levels, you see the sensitivity really come in when we start crossing those levels. So it's the same thing to the downside, right? When we cross these kind of, or within these overall sensitivity levels, zero gex, bottom of drunken sailor range, very supportive, good area to possibly take a trade if it was not FOMC, right? But if you were within this overall range, obviously we're driving to the upside pretty significantly now. So we'll watch 6,400, that key area overhead. And obviously we're above transition, which is a positive development. We're above the drunken sailor range as long as we stay here, which would be a positive development to the upside. We did see, as I was talking about, the MTM moving to the upside, starting to see the filtered cumulative tick, plus 1,000, minus 1,000 larger block orders move above zero. Again, and turning to the upside. So that's definitely positive, and we'll continue to watch that. So positive developments as we were heading into FOMC, at least with the market trend model, as well as the filtered cumulative tick. And then it looks like we're kind of seeing that come to fruition now as we drove through. So, but we'll see. Lots of things can happen during the press conference. So, all right, everybody, thanks for joining us. We'll check in after the press conference and kind of see where we're at within those overall levels. Make sure you mark these on your chart. These are be key levels heading into the close and heading into the afternoon. Obviously, we see pretty algo driven now just because of the news back and forth. So we'll see if we hold these levels and drive higher, or if we start moving back down into the overall drunken sailor range where it can be extremely choppy. So thanks everybody for joining us. Make sure you check us out on X as well as YouTube, and